Coming up on Business Incorporated today, AFDB partners Nigerian government and Microsoft to create 9 million jobs in 10 years. Global aquaculture market projected to hit $245 billion by 2027. And Ethiopia gold exports surge after crackdown on smuggling. Hello and welcome to the program Business Incorporated. I'm Temple Ashaju. Let's get the show started with the market numbers. And here in Africa, markets were mixed at intraday, with South Africa's JSE shaving off some 0.95%, while Nigeria's main index resumed trading after the Independence Day holiday, marginally positive at the moment. Now, the market in Egypt closed for the week positive on Thursday, as Kenya's market ended Thursday's session in the negative territory. And major markets in the Middle East ended the week lower on Thursday, except the Qatari index, which advanced by 0.16%. On the flip side, the markets in Saudi Arabia declined marginally by 0.05%. And in the UAE, the Abu Dhabi index shed 0.58%, while Dubai's main index was 0.34% lower. Let's get offshore down to Europe, where European stocks traded lower on Friday morning after President Donald Trump says he and First Lady Melania Trump had both tested positive for COVID-19. Let's bring in Ashutosh Pandey, who is standing by with us, of course, at the Frankfurt Stock Exchange to tell us more about this. Hi, Ashutosh. Happy weekend, I should say first. But we know that President Donald Trump has tested positive for COVID-19 now. And of course, markets all over the world have been reacting to that. Give us a sense of what's going on at your end.
Well, first of all, happy weekend to you too, and thanks for having me. Well, it's the same here. The markets are in the red across Europe, in Paris, in London. Here also, if you see behind me, the DAX is there in the red. They're really struggling to make some sense of this news. For now, they are taking a risk-off approach. It's a classic way to react to such stories when you don't know what to do actually next. So they've just taken themselves away from the risky assets, putting them in the favor of safe havens, and then perhaps later they will decide as to how do they go about in the future. There is uncertainty now. They don't know how the election is going to pan out or how the campaigning is going to happen. They're also worried about how those negotiations about a possible fiscal stimulus that the market desperately needs at this point of time is going to work. White House, remember, is a key negotiator in that process. So yeah, there's a lot of uncertainty there, but we all know the market at this point of time maybe it could be a knee-jerk reaction there also, because they really don't know how to process this, and they are in this time they are processing what impact would it have. And we've seen this in the past also, when Prime Minister Boris Johnson was tested positive, and that's when the markets fell, and after that they stabilized a little while later. But however, this could be a little different in this case, with the elections being just round the corner, a month away from those November 3 elections. So it's a little different this time around.
Let's drill down into this difference as it relates to the presidential election more. What will it mean for the markets eventually?
To begin with, there will be a lot of volatility there. There was already so much of uncertainty around whether this is going to be a disputed vote or not, whether there's going to be a controversial vote, some sort of a legal tussle would take place after the election if Biden were to win. So this just adds to that. And especially after that acrimonious first debate that we had earlier this week, there were those concerns about a contested vote, and now there's just another uncertainty element. Even if it's not so much about the election at this point of time, this is definitely about how is the White House going to function, what are the systems in place? Is President Trump going to work or not if in quarantine? How is the campaigning going to progress? It certainly limits his ability to campaign, reduces his opportunity to go and appeal to the fence sitters. That's going to be challenged because he's known to work his personal charm on voters. And that is going to be limited with many of his political events being cancelled. So, yeah, it's sort of a blow, political blow also for now for President Trump. But, I mean, we wish him a speedy recovery there.
Of course, the economy feeds a lot on politics, actually. But then again, this could lead to some kind of a shift across the markets, as we already seen a feel of that in the gold market or the metal market. In early trades, we've seen some serious reaction there as folks continue to move from the mainstream markets to this other safe haven. But what else is moving the markets? We've just dotted the I's and crossed the T's for the Q3. Are there any earnings coming in at this point, and how are traders brazen up for that?
Well, absolutely. Yeah, you mentioned that gold and other safe havens like dollar, yen doing well. There is a rush for the safe havens and oil is not performing well. You remember oil is down below $40 a barrel. That's Brent. But yes, the other information that's coming in now was it's about Eurozone inflation. That is at record lows, largely owing to the fall in prices related to tourism, and the services inflation is down basically. And then the VAT, there are temporary issues like the lower VAT in Germany, which is the biggest economy in the bloc. And also there was a slight delay in the sales season. So that is a temporary factor. But nevertheless, that has actually pushed inflation to record lows. And core inflation is even lower if you actually, in fact, core inflation is a little higher. That does not take care of, that basically removes the more volatile elements like food and energy. And so that's a little higher, but still it's at the record low. But this should give some headache to the ECB, and the doves are definitely going to call for further monetary easing, as they say. But experts feel that could come as early as December this year. Then the other numbers just coming in is the US job numbers for September. And I see here that they've slowed down to 661,000 and 7.9% unemployment. That's a little positive, but then today the entire market is being dominated by that the story of Trump contracting the virus. And even with this 7.9% unemployment, I must tell you that it is still far higher than what we were in February. The pre-pandemic highs in terms of the job market and in terms of jobs there, we are still very far from that.
All right, Ashutosh Pandey, thank you so much for those analyses. Go have yourself some rest from all of these calculations and research that you've done from Monday down to Friday. So markets in the United Kingdom also sank this morning on United States President Donald Trump's COVID-19 diagnosis as traders wasted no time ditching their stocks. Let's get updates on this and more from Juliana Olayinka in London. Hi, Juliana. It's good to have you on the show. Are the markets in London still reeling from the news that President Trump tested positive for COVID-19 or not?
Absolutely. Major story here, major story across the globe, as you said. The FTSE opened sharply lower, same at intraday. Lots of speculation, lots of uncertainty, very volatile, as you were just discussing pretty extensively over in Frankfurt. You know, the US president's health is, of course, a major sentiment for the economy. We haven't seen anything quite like this since Ronald Reagan was shot in 1981, and quite rightly, considering over 1 million people have died, even though the majority of people have pretty mild symptoms. COVID-19 is still a deadly disease. There's been lots of speak on British media at the moment about his age. Donald Trump, the US president, is 74. He is considered obese and he is in the highest risk of category. So there are major concerns. We also heard from Prime Minister Boris Johnson earlier. He actually spoke on television wishing the president well. And of course, it's the 2nd of October. November the 2nd is the US presidential election. I'm hearing a lot about the October surprise. Of course, this is not exactly what anybody was expecting. As you said, lots of people running to the safe haven, gold, and of course, the US dollar. We'll have a look at the numbers. The FTSE All-Share is down 0.61%, the FTSE 100 and the FTSE 250, both down by 0.91%. And the currencies market, the British pound up on the US dollar by 0.17%, up on the euro by 0.44%, and up on the Japanese yen by 0.13% at intraday.
Well, Donald Trump and Melania Trump, we can only wish them rapid recovery at this point because both of them actually occupy a very, very viable position in the whole world. I believe, Juliana, you're with me on that. But we know that the UK Prime Minister and the President of the European Union Commission are to be meeting tomorrow to take stock of post-Brexit trade negotiations and, of course, discuss next steps towards Brexit. But what are people's expectations from this meeting, this sort of rendezvous, and any ideas to what's top on their agenda apart from just taking stocks?
Well, gosh, you know, who knows what the outcome could be of this? You know, we've had 4 years of this Brexit back and forth, haven't we? But considering what's coming out of Brussels, we are seeing that this discussion is potentially good news. It will be a phone conversation taking place tomorrow. This is actually the first time that Prime Minister Boris Johnson has spoken to the EU Commission President Ursula von der Leyen in about 4 months. Obviously, I believe it was on Thursday, yesterday, she did announce that she would be taking legal action. The EU would be starting proceedings of legal action against Britain for the internal market bill, which is ripping up the withdrawal agreement treaty. There hasn't been really much discussion about if they'll be talking about that. I presume they will. There's lots of discussion about the concessions on trade, concessions on fishery. Now, I believe the 10th round of negotiations started happening earlier this week in Brussels. Michel Barnier and Lord David Frost, they both had pretty extensive discussions. What we're told is that things do appear to be moving along swiftly. Now, Boris Johnson actually put a deadline down for the 15th of October for a deal to be signed because the rest of the EU 27 are having one of their extraordinary summits, albeit remotely. But that seems to be completely out of the window now. Lots of observers close to the matter do believe that the first weekend in November will be the time for a deal. But again, we don't know. You know, we didn't expect a couple of weeks ago for Boris Johnson, after campaigning on a mandate that he had an oven-ready deal, would rip it up 9 months into the year. So we just don't know what's going to happen. But it seems to be a good thing. And we are told that on Monday, Michel Barnier will be speaking to the German Chancellor Angela Merkel. And of course, Germany and France have a major say on what will happen going forward with this EU Brexit deal. So we'll have to see. Well, I'll update you on Monday.
All right, we'll keep reading the tea leaves of that negotiation deal. Well, let's look at what Asda owner, that's Walmart now, is confirming that the Isa Brothers and TDR Capital are to buy the grocery chain in a deal valued at some £6.8 billion or thereabout. What does that takeover really entail?
Oh, gosh. Well, now what it means is that Asda, Britain's third largest supermarket, is a British company again. It was bought by Walmart, I believe, about 20 years ago, 1999, for £6.7 billion. They did want to merge Asda earlier this year with Sainsbury's, but the competition regulator got involved and decided that they couldn't do that. So we know that the Isa brothers have been in a long discussion with Walmart trying to secure a deal. They've secured the deal. I believe Walmart will be retaining a minority stake. This is seen as really good news for Britain. The fact that Asda does remain in Britain, especially for Boris Johnson in that kind of whole Brexit rhetoric. We do know that the chief executive, Roger Burnley, he will remain in his position. I believe that part of the deal was to agree as well that the staffing structure will stay in place until at least the end of next year. And the Isa brothers, you know, they're all over the press, I've got to tell you, today, because it is seen as a good, not rags to riches tale, but they are a pretty surprising name to be having or to be owning Britain's third largest grocer store. They actually own the EG Group, which is a company that owns petrol forecourts, which is, of course, where they would have earned their billions. They started off with only one just a couple of years ago. Now they have over 5,200 petrol forecourts across Britain. And, of course, they've used that massive investment to go and secure this deal with Walmart. It's seen as really great news here in Britain, Temple.
We'll keep that on our radar as well, as, of course, we'll keep fingers crossed for what will be making the news next week. Juliana, happy weekends to you. Go have some rest. And, of course, Asia-Pacific markets now declined on Friday. And, of course, in Australia, the ASX 200 dropped by 1.39% to close at 5,791.50 points, while Singapore's Straits Times Index was about 0.2% lower. And in Japan, the Nikkei 225 declined by 0.67% on the day to 23,029.90, while the Topix Index slipped by 1% to close at 1,609.22. Now, the Tokyo Stock Exchange returned to trade on Friday following a halt of the trade yesterday, which was caused by some hardware glitch. And overall, the MSCI Asia ex-Japan index dipped by 0.23%. And of course, markets in China, Hong Kong, Taiwan, South Korea, and India were closed on Friday for some holidays. We'll bring you much more stories shortly after this break. Let's stick to Africa and go over to Ghana now, where earlier this week, the Monetary Policy Committee of the Bank of Ghana maintains the policy rate at 14.5%, citing improved outlook to growth and, of course, inflation. Now, the governor of the central bank, Dr. Ernest Addison, estimates that growth in 2020 would actually be between 2% and 2.5%. That's something that has been contested, actually, across that market or across that climb. But he explains that the fiscal policy is sort of a source of considerable stimulus, driven mainly by exceptional expenditures directed towards goods and services and, of course, capital expenditures, as well as COVID-19 related spending and in the energy sector. Well, let's join John Kennedy, who is the founder and managing partner at Bespoke Business Consulting in Ghana. Hi, John. It's really good to see you again.
Yeah, good afternoon.
Good afternoon
to your viewers.
Great.
Yeah.
So the Bank of Ghana left monetary rates unchanged for the third time at 14.5%. Was that in line with expectations of course, analysts like you?
Yes, we were not surprised. We actually thought that they could reduce it from 14.5% to like 14 or 13.9 based on our analysis. However, I think it's in the right direction because for the 3 consecutive times, it's seen that has helped rebound the economy a little bit gradually. And before now, in the second quarter, we have inflation around 11.4%, and now it has dropped to 10.5%. And the price inflation rate was 15.1%, and now it's 11.4%. So based on this, I think it's in the right direction. I think we just need patience and gradual seeing if everything changes to positive.
So what will be the implication of this decision for the Ghanaian economy and, of course, businesses at this time? How will it affect your M2, the money supply? Will it contribute to it or otherwise?
Basically, it's a gradual process. It's not something that will get something like it happened simultaneously. What you get to understand now is that because of the economy rebounding gradually, you could see now that the economic activities has now shot up more than what was expected. So this is what the implication will be. It's actually going to be positive for the next, till the end of the year, if nothing changes. The business confidence has actually increased, but yet to reach the pre-lockdown level. The foreign exchange has been able to they've been able to stabilize the foreign exchange to an extent to which it is possible for you to exchange at a favorable rate. So basically, it's going to be positive, not negative.
Now let's look at the expectation that the authorities now have that the economy will grow between 2 and 2.5% this year. Given the fact that we've seen some level of contraction in the second quarter, is this really feasible?
It's not that visible. Projection is always a projection. Except whatever measure they put in place is able to affect the economy so that the economy responds positively. However, we could see that in the third quarter, the economy rebounded a little bit, and you can see that it is a positive thing and a gradual increase. However, we think that it might not reach 2.5% at the end of the year. It could hover around 1.8 to 2% based on what the analysis we've done so far. But hopefully, that could also help.
Some sort of a U-curve recovery, actually. Well, with the fact that we have an election in the offing at this point, what's your outlook for Q4 and, of course, the rest of the year, January to December numbers?
Well, as analysts, we believe that things will still go smoothly. There's just a little bit of scary aspect of how things have been done regarding the political parties and the politicians. There's been a huge influx of foreign exchange, and when there's huge influx of foreign exchange, it affects the exchange rate, the dollar gain against the cedi, and this tends to ripple effect on the price of goods and services. So there could be, if you're not careful, there could be inflation towards the end of the year, and this could affect almost everything. So we are looking at an increase, a possible increase in the exchange rate, and this will have a ripple effect on product, consumer price and services and all that. So we don't think things really change so much, except for the foreign exchange changes.
Well, the good thing is that Ghana and the United States of America have given some kind of objects to folks now to bet on. So these are the two key countries to watch at this point in time, perhaps for investment. John Kennedy, thank you for your time on the program. He is the managing partner at Bespoke Business Consulting in Ghana. Have a lovely weekend. And now the African Development Bank, the Nigerian government, and of course Microsoft have launched an e-learning digital platform to create 9 million jobs in Africa's digital economy in the next 10 years. According to the AFDB, the Digital Nigeria e-learning platform seeks to provide marketable digital skills for the country's youth. Now, the platform will leverage the AFDB's Coding for Employment initiative and build linkages between the public and the private sectors. And the platform offers courses in web development, content creation, and of course, data science, among others, using gamification technologies to teach problem-solving, collaboration, creative thinking, and basic coding. And as the COVID-19 pandemic has had a damaging impact on aquaculture, the market is expected to lose steam before recovering to reach a projected global market size of $245.1 billion by 2027. According to the recent report by Research and Markets, fish and aquatic food value chain is currently witnessing a medley of challenges ranging from shutdown of operations and changing consumer demands. Global food supply chain are severely disrupted as governments move swiftly to implement trade restrictions to protect domestic food supplies, a move that has and continued to impact our countries dependent on food imports. The report says unless immediate corrective measures and policy changes are made, seafood, a critical part of food security goals, will become less affordable for the poor under the current scenario. And that's it on the show. Thank you so much for being a part of it. Do have yourself a lovely weekend. Bye for now.